Okay, good evening, and let's start our last class in the stock trading course. Today we'll have a bit shorter class than all previous classes. We will try to make something like a conclusion of our course. And I would like to start with some additional notes from the previous classes. And first of all, I would like to mention taxation, and the taxes you need to pay when you are trading on a stock market. In most cases, all taxes are paid automatically by your broker, and this is, in my opinion, one of the parameters of choosing a broker. So my advice for you is when you are looking for a broker, please check that that broker will process all taxes automatically for you. And if you choose a good broker, it will pay all taxes for you automatically, but still you need to understand that you will pay 13% tax for each profitable deal you make. So, for example, if you bought Sberbank for 60 and sold Sberbank for 70, in this case, you gain 10 rubles and you will pay 13% tax for that sum of money. And for non-residents, the tax rate is equal to 30%. Usually, taxes are paid at the end of the year. So on December 31st, on the night between December 31st and January 1st, your broker takes money from your account and pays taxes for the whole previous year.
What if I don't have money on my account?
Sorry?
What if I don't have money on my account?
In most cases, there are two ways how a broker can pay taxes for you. One of them is automatic way, when between December 31st and January 1st, it automatically takes a certain sum of money. At the same time, if during the year you try to take some money from your account, or for example, you would like to just close your account or something like that, to take a certain sum of money from your account, a part of it. In this case, it will take taxes from that sum of money. So it means that, for example, today is January 30th, and for the previous 30 days, let's assume my profit was 10,000 rubles. In this case, if I try to take, let's say, 100,000 from my account, broker will calculate taxes to date and take them from the sum of money which you would like to take from the account.
Yeah, the year. Okay.
At the same time, if you do not take money from your account, they will be taken automatically during the new year.
What if I win some money then lose it? Do I have still tax?
So the point is that you pay taxes for every profitable deal. It means that if you let's assume that you make two deals in a row. First you buy Sberbank at 60 and sell it on 70, and then you buy Sberbank at 80 and sell it on 70. In this case, you will have two deals. One of them is profitable, one of them is not profitable. In this case, you'll pay taxes only for the first deal, and the second deal will not influence your taxes. And this example shows that actually for you, trading is random trading is a situation when your math expectation of profit is negative, because for each profitable deal you will pay 13% tax, and for losses you will not pay taxes, but still you will not get them back. One more advice. There is a quote about poker. Who doesn't know what is poker? Two people do not know what is poker.
I don't know how to play.
That doesn't matter. I mean, let's assume that you know that there is such a game, and there is a quote of one very famous person that if you have been playing for a while and you do not see the person who will lose money, it will be you who will lose money. We had, if you remember, we had, let's say, a tradition of guesses and questions for prizes. Today we will have a prize for the person who will guess who is the author of this quote.
Google first.
You mentioned him during the first lecture.
I mentioned. The point is that this is not a random question. Actually, we mentioned the name of that person during previous 5 classes.
Warren Buffett.
Yes, it's Warren Buffett. And you get a prize. So the author of this quote is Warren Buffett. And this quote was originally about poker game. And we can somehow transfer that quote from poker game to a stock market. If you have been trading for a while and you do not understand who are the people who lose money, you will be the person who will lose money. This is just my remake of that quote, and this is not, let's say, this is not a rule. This is just my advice. My advice for you is to try to understand. If you are trying to develop a profitable trading strategy, the advice is to understand who will lose money in this trading strategy. For example, if you try to read news and you try to react to news faster than other people, in this case you will try to win money from people who read news slower than you do. And my advice is that if you do not understand who will lose money in this strategy, it means that this is a very risky strategy. Because if you do not understand who lose money, but still we know that some people will lose money. In this case, there is a risk that you will lose money in this strategy. And finally, there is an issue about zero-sum games and non-zero-sum games. Who knows what does zero-sum game mean? Okay, some people know. Who doesn't know what is a zero-sum game? Okay, most of people do not know. Actually, this is a term from the game theory, and we can divide all types of games into two parts, into two types. First one, it's a zero-sum game. A zero-sum game, it's a game where the sum of outcomes of all players, that sum is equal to 0. For example, if we are playing chess, this is a zero-sum game. If one person wins, the other loses. Some more examples. Poker. Yes, poker. It's another example of a zero-sum game. In this case, in the case of poker, if you win some money, another person loses some money. So there is no way to receive some money from the outside.
In case there are taxes in poker.
Sorry?
In case there are taxes in poker, it is not zero-sum.
Taxes? You mean?
I mean, if we take tax from income from poker.
Oh, okay. Let's just assume that we have a very simple model. and no taxes, etc. And this is an example of zero-sum game. What is a non-zero-sum game? It's an opposite situation when the sum of outcomes is not equal to 0. Actually, in most cases, it is higher than 0. What are the possible examples of such situations? There are lots of examples in negotiations. There are lots of examples in negotiations when you're not trying to, let's say, buy something or sell something, when you're trying to obtain a good result for both sides. And in this case, the sum of outcomes is not equal to 0, it is usually higher than 0. And the question is whether trading on a stock market is a zero-sum game or not a zero-sum game. And there are different opinions in the internet and even in books. My opinion is that if you are trading in a short run, this is a zero-sum game. Because in a short run, the difference in prices of stocks is approximately equal to 0 or something like that. So in this case, if you'd like to win some money, another person should lose some money. And this is a zero-sum game if we are talking about, let's say, minutes, hours, and days. But if we are talking about long-run period, something like years or months, in this case, trading on the stock market becomes a non-zero-sum game. Why? Because the average growth rate of S&P index was approximately 20% per year. It means that the total market capitalization of all companies was growing by 20% year over year. In this case, if the total capitalization today is equal to, let's say, $1 trillion, next year it will be approximately $1 trillion and $200 billion. And in this case, it is possible that in a year or in 2 years, people will have more money because the prices of stocks will be higher. And why this slide is important. This, let's say, discussions about zero-sum or non-zero-sum game. Because if you, when you're trading, you would like to earn some money, and you need to understand how you could get that money, how you can earn money. And in the short run period, when you're trying to make money in short-run period, it means that you are playing a zero-sum game, and it means that your profits are equal to the losses of other people. And in this case, there was an advice from the previous slide that you should understand who loses money. If you are investing money for a long-run period, let's say for 1 year or 2 years, in this case you can rely on the average market growth of approximately 15 to 20% per year. And in this case, it might be not a zero-sum game. Okay, next. So now, let's make an overview of what we have studied during the course. We studied general notions of stock markets. What is a stock? What is a share? What is a stock market? What is a stock exchange? We opened an account and we learned how to submit orders to the stock exchange. What are the types of orders? And we had a practice session when we saw the stock exchange in real time. We started trading approaches, fundamental analysis, technical analysis, and techniques how we can make money. We talked about trading strategies, components of trading strategies, and how you can build a trading strategy based on a certain trading approach or technique. We covered common mistakes in trading and what actions should you avoid making in order to be profitable and to create a profitable trading strategy. And we covered some, let's say, more advanced trading techniques about Elliot's wave theory. We covered some material about trends, moving averages, and had some examples. What advice I can give you for studying trading further? First of all, let's understand that these 6 classes were introductory classes, and this is just general information about trading. Now you know how to submit orders, but still you need to first you need to create a profitable trading strategy to calculate its profitability on historical data, etc., etc., if you would like to earn some money and to be in 10% of traders. What you can do for achieving these goals? First of all, I posted links to 2 online courses on Coursera. I posted them on Stellar. There are 2 courses. First of them is about technical analysis and different models of how we can predict prices. Actually, I received in feedback forums, I have received a lot of questions about more complex techniques of technical analysis. In this case, please have a look on that course because it has some, let's say, advanced techniques, and it actually implies some programming in Python for constructing, let's say, models of predicting prices. There is one more link to another course. That course is about fundamental analysis and the way how we can try to predict the fair price for stocks. Fundamental analysis requires more knowledge, and it requires more understanding of general concepts of finance and how companies make money. Additionally, I put references to some books, and those references are for the books which were recommended by Warren Buffett, and those books are mostly about fundamental analysis. There are approximately 9 recommended books, so if you would like to get deeper experience and deeper knowledge about fundamental analysis, please have a look on that books. There are 9 recommended books, and you can just, if you would like to start from one book, you can see their ratings at Amazon. I included links to each book. I included a link to Amazon for each book. I already purchased a couple of them, and I advise you to do the same if you would like to proceed in trading. Then I posted links to movies. Actually, this is the most, let's say, the most interesting or the most colorful part of the brightest part of the course. This is about movies, about trading, about math, about stock markets. You know that our university is built in partnership with MIT. So there is one movie called 21, which is about a bunch of MIT students who try to beat Las Vegas. And that movie is based on a real story. This is a movie not about trading and stock markets. This is just a movie about math. So it shows how you can find some dependencies in simple math. And the fourth advice, let's say the fourth component of this slide, it's the most important. It's about practice. So you have opened demo accounts. Each of you has opened a demo account. You can proceed with opening a real money account, and you can just practice with the demo or with real money. It takes some time for each trader to learn all basics and advanced techniques and to become profitable. You can try to submit different orders and try to use different techniques in your trading.
Alexander, I have a question. When I was doing this competition, I changed strategies from the goal, but I think it is more like it's almost sometimes it's almost random. How do you change strategies when you're trading? I change strategy when I see that my previous strategy, or let's say my current strategy, is not working. How do you technically do it? You sell all the orders and yes, how often?
I just close all positions. So my strategies, by strategy we mean a certain sequence of steps or sequence of rules, how we open positions and close positions, and how we manage money between positions.
So I have several orders with one strategy. I feel that there is some other stocks that can be traded more efficiently than my current strategy, and I want to try with them as well.
If you would like to try one more strategy, you can either close all your current positions and you can switch to the other strategy, or you can, let's say, add some money to the stock market and to your trading account for testing the other strategy. And as for me, I usually switch strategy when I see that my current strategy doesn't work. Actually, in most cases, this is a situation when it is not profitable for several deals in a row. Yes, we had some questions. Yes, please. Sorry, could you please speak a bit louder? Yes. Yes, good question. Actually, when you are trying to play a game, it's a good idea to know the number of players in that game. It depends on, in most cases, it depends on stocks, on companies. You are trying to buy money of which you are trying to buy stocks. I mean, for each company, the number of players is different. If we are talking about Apple, it's the largest public company in the world, and in this case there are, let's say, millions of traders who buy and sell Apple stocks. If we are talking about Sberbank, which is a very large Russian company, it's a very large company, but still it's only a Russian company. In this case, the number of traders can vary from, let's say, tens of thousands up to hundreds of thousands. And you will develop different strategies for different numbers of players. How you can learn how you can see the number of players. Actually, this is about not just about players. This is about the sum of money which they manage. Because we can get 100 of players with $10, or at the same time we can get 100 of players and each of them will have $1 billion. These are two different situations. In this case, my advice for you is to look at volumes. When we had a practice session on class number 4, and when we analyzed some historical prices, we downloaded some data some historical prices about Apple, and we saw that there was the last column, and it was called volume, and that was the number of shares which were bought and sold throughout the day. In this case, you can see, you can think of that numbers as of the number of players in a very simple model. And sometimes, if you see that the volume is high, it means that more stocks are traded throughout the day than in a usual day. In this case, it may the reason for that is maybe it's because of some news, some breaking news or something like that, some urgent news. Yes, please.
And also the question about volume-dependent companies, like if you want to make a strategy, for example, and we are buying the stocks of one company, should we consider another company which probably, stocks probably depend on the stocks of the company? I mean, to consider the whole amount of players in our game, to consider all this kind of situation.
You should solve this problem, so get answers to that question when you are building a trading strategy. If you see that there are two companies and the price of one company depends on the price of another company, this could be a good basis for your trading strategy. Because if let's say that we have two dependent prices, if the prices are changing on the same direction, this is okay, a usual situation. But if they are changing in opposite directions, in this case, you can try to open a long position for the bottom stock, for the bottom company, knowing that the prices are dependent, so they will restore. This is one of the ways how you can create a trading strategy, one of the techniques. And actually, the technique of comparing two companies with dependent prices of stocks, this is actually a good strategy. I know that some traders have made much money on it. But still, you need to figure out two companies with, let's say, dependent prices, so they can be in one industry, and so then you need to do some math with all those prices. Okay, now it's time for our feedback form, and what will we do now? This is the link for the feedback form number 6. A small reminder about feedback forms and all this stuff. As soon as we have some requirements from the education office, so that we have a pass-fail course, the pass criteria for the course is very simple. You need just to fill all 6 feedback forms. I sent you on Monday, on Tuesday, I sent you a spreadsheet with the current status of all feedback forms, so you can see in real time. Not in real time, but let's say with 2-day lag, you can see the current situation with feedback forms. The requirement is that a feedback form is considered to be a filled feedback form if it doesn't contain any blank fields. So you need just to answer all questions. The only, let's say, the only fields you can miss, the only questions you can miss are what did you like about the class or the course, and what you did dislike about the class or the course. For all other questions, you need to submit your answers. So now we have some time for filling and submitting feedback forms. This is feedback form number 6. You can have a look on the spreadsheet with other feedback forms and fill them. Let's say that at the same time you can grab some coffee. Let's say that we will continue in approximately 25 minutes. So now you have time to fill this form, to fill previous forms, and we will continue in 25 minutes. We will have a large Q&A session about the course and all the material we covered during the course. So you will be able to ask whatever questions you want. And finally, I will announce the winner of our trading competition. Now let's continue our class. And I hope that each of you has submitted this feedback form, number 6. This is the last feedback form in our course. Now it's time for the Q&A session. And after that Q&A session, we will announce the winners of the trading competition. Okay, Q&A session. You have an opportunity, and this is the last opportunity to ask questions in this course about all the material we have covered during all our classes and all lectures. Yes, please.
Can you recommend some online resources where it is well described why some strategies are profitable and some were not profitable in certain situations? Like a bunch. Like this strategy was good because this and this and this, and
actually, the best way to figure out which strategy was good and which was bad is a spreadsheet with calculations.
but why? Like you cannot connect, with real news or whatever.
One way, one option, you can try to Google such websites, and you can usually you try to analyze the price for one company, and you see that sometimes there are huge increases and huge decreases, huge gaps in price. You see the date of that event, and you Google the company name and the date. Another way is to go to NASDAQ. For example, for NASDAQ, I'm trading mostly on NASDAQ, so I have a solution for NASDAQ. You can go to the website, it's nasdaq.com. You can type the ticker or the company name, and they have latest news about that company. In most cases, this is not the type of useful news which predict the future. It's a type of news which describes the past. So in many cases you can see news like, okay, today there was news that the profit of Apple hit its highest value of all times. That is why on Tuesday the price of Apple stocks grew by 9% or by 8%, something like that. In this case, if you go just to NASDAQ website, you will see some explanations about past events which took place 1 or 2 days ago. And so they will somehow describe you the changes in price. Yes, please.
Why are some stocks sold in groups?
In groups?
So there is no opportunity to buy a single stock. Therefore,
the reason is that it is used actually mostly in Moscow Stock Exchange. It is the issue of price for stocks. We know that we have for each company we have a certain number of stocks. We have the price for that stocks. We can get the valuation of that company by multiplying these two numbers. But the prices for stocks can be different. In, let's say, New York Stock Exchange or NASDAQ, the price for stocks varies from several dollars to several hundreds of dollars. And they try somehow to show, let's say, in many cases, not in all cases, but in most cases, price on NASDAQ somehow shows you, let's say, the size of a company or something like that. For large companies, they try to maintain the price of stocks in dozens of dollars or hundreds of dollars. For small companies, they have price of stocks in just dollars, something like $9, $8, $10, something like that. And in comparison with this situation, in let's say US markets, on Moscow Stock Exchange, the prices of stocks are random. So the price for Sberbank is equal, one Sberbank stock is equal to 60 rubles, approximately 60 rubles. The price of VTB is 1,000 times less than the price of Sberbank. It's approximately 6 cents or something like that. And to somehow to balance these prices, they introduced the smallest numbers of stocks which you can trade. If the price of Sberbank stocks is equal to 60, they say, okay, 60 rubles, it's a very small sum of money to be traded on a stock exchange. That's why they said, okay, let's put the smallest number of stocks of Sberbank equal to 10, and we will trade Sberbank not by one stock, but by 10 stocks. It means that the smallest number of stocks which can be traded is equal to 10 for Sberbank. For VTB, it's equal to 10 or 100,000, something like that. So the minimum price which you can pay for Sberbank stocks is equal to 600, and you will buy 10 stocks. For VTB, you will pay 600 rubles, and you will buy 100,000 stocks or something like that. And for Gazprom, I think the price is equal to 150 rubles right now, and in this case you can buy 10 stocks, at least 10 stocks of Gazprom, paying 1,500 rubles approximately. Sometimes there are stocks which have very high price, Transneft or something like that. The price is calculated in hundreds of thousands of rubles per one share. In this case, the smallest number of stocks is equal just to 1. So the idea, or the overall idea, is to balance the prices to balance the minimum prices. If the price is equal to 6 cents, in this case, they do not want to get, let's say, billions of orders each second, buying and selling one stock of VTB, one stock of Sberbank, something like that. Yes, please.
There is also companies who different trading for something. I just wondering what kind of responsibilities they carry, and do they have like a license to trade?
Who?
The company, trading companies. Like it's not like individual trader, but probably there are companies.
Company, you mean Sberbank, which have
No, I mean the company which businesses to trade.
brokers? I mean, the situation is the following. We have a stock exchange, and stock exchange is a place where stocks and shares are bought and sold. A person or a company, just a person cannot go to the stock exchange directly and buy and sell stocks. Only a company which has a license can trade directly on a stock exchange.
But still, this person has to make decisions, right? To sell or to buy.
Person?
Yes.
Yes.
It's not a broker still. So to make decisions.
Yes. People make decisions about what to buy, what to sell. So,
Is there any companies which make decisions?
which make decisions for you? You mean that they take your money and yes, there are a lot of examples. Investment funds, venture funds, something like that. So this is a huge industry of funds which take money from people, from investors, and from participants, and they do some things with that money. Venture funds, if we talk about venture funds, they invest money in startups. If we talk about investment funds or something like that, so they can invest money in stock exchange. So there are different types of such companies. There are specific companies which take money for trading on the stock market, and actually, in most cases, your broker offers you an opportunity to, let's say it is called, follow a certain strategy. It means that they have an experienced broker with an experienced strategy, and that strategy is profitable on historical data, and you can follow those deals automatically. It means that if that broker, that trader makes a deal, that deal is repeated on your account as well. In this case, let's say I do not recommend doing such things because you know that first of all, you know that if there is a strategy which is used by many people, you know that this strategy will hardly be profitable. Additionally, you do not control your money. It means that you take all risks of possible losses, but you do not have any control, and the person who controls your money, he doesn't take any risks. So okay, I have a strategy, you can follow my strategy, but okay, if it's not profitable, if it will give you huge losses, okay, this is not my responsibility. This is a bit dangerous.
In most cases, these companies do like this. I mean, they avoid all responsibilities for the money.
In most cases, so this was one example of following a certain strategy. This is just one, let's say, one case, one, let's say, one technique, one situation. When your broker offers you to follow a certain strategy, a certain profitable strategy. Another situation is when there is a fund, let's say there is a famous trader who would like to raise some money because he knows, let's say he pretends that he knows a profitable strategy, he raises some money for that for himself, and he trades with that sum of money. Usually his salary and his profit depends on the outcome. So if he, let's say, if he makes 30% per year, which is a very huge percent for, let's say, for US market, he receives, let's say, I don't know, something like 10 or 15% out of that sum of money. Warren Buffett, he performs a strategy like this. So he started trading 50 years ago with $100,000. Now he has approximately $70 billion. You can simply calculate that with his average profitability of, I don't know, 25–30% per year, still starting with 100,000, you will not get 70 billion in 50 years, even with all these multipliers and percentages. What did he do? He asked other, let's say, friends or other people, investors, to invest money in his company, and his company made deals, and he had a certain share in that company, and he received some profit out of the overall profitability. Yes, you can find such funds. Still, the problem is that many of such funds are not profitable. some of them are profitable, maybe many of them are profitable, but still a decent percent of those funds are not profitable. The problem is that you do not control your money, and if a person, let's say, if a trader loses your money, he doesn't take responsibility of returning you that sum of money. So okay, he can say, he can tell me something like, okay, I made a bad decision, I lost all your money. That's it.
May I ask you one question about, did you try to trade on pharmaceuticals companies? Like sometimes they discover new fields or something and they can make lots of money, and of course their stocks will grow, like their price will grow.
No, I have never tried pharmaceutical companies. The reason is that I'm trying to make money in short run period, and in this case all pharmaceutical companies are about a long run period, because they need a lot of time to discover new drugs and to test them. The problem is that in most cases this is a question of let's say sudden use. So suddenly you know that that tests of a certain company gave good results, and the price was skyrocketing.
This information is available on the website. Like you see this information, there are lots of like first clinical trial, like first phase, second phase. You see that probably several phases are successful. Just buy the shares in the company and
You can try that, but you need to understand that you are a human, and at the same time there are a lot of different robots which scan all this information automatically. It means that you will hardly be able to, let's say, to be faster than those robots.
but it's not necessary for robots work.
It's not necessary, but still there is a risk that okay, tests are negative and the price will significantly decline, or the company will go bankrupt. This is also a possibility. If you believe that a certain company performs well in future, you may invest in that company. This is one of the ideas. Still, you need to have some criteria or some arguments why you are investing in that company. There should be some reasons. And if these reasons are about discovering new drugs, new breakthroughs in medicine, in this case, this is about fundamental analysis. And this is one of the techniques. Okay, great, you can use the techniques. First of all, you need to study the process of verifying a drug, the process of discovering a drug, etc., to know what does it mean when you see in use that, okay, the first test or the clinical test of a certain drug was successful.
It's also about investing money in startup companies. Is it possible to make it through stock exchange or something?
No, Moscow Stock Exchange, it's about large public companies. It's about companies who went to IPO, which is initial public offer. And only the idea is that for we use stock markets to invest in large public companies. These usually are companies with some track records, with some history of profits, of revenues, and each stock exchange has some requirements for a company to be traded on the stock market, on a stock exchange. And you can see those requirements easily on the internet. There are strict requirements for New York Stock Exchange. For Moscow Stock Exchange, they are not so strict, but still there are some requirements like having decent revenue stream. And for startup companies, in most cases, okay, it is impossible or very hard to get a good revenue stream. Okay, any more questions? Okay, what's next? And this is, so now we will turn to the last part of our today's class. This is interesting. On our class number 4, we had a feedback form with a trading strategy, and I said that if you submit the feedback form till the midnight, you will be able to participate in, let's say, a small competition of trading strategies, and the overall task was to create a trading strategy, to describe it in a feedback form, and to test its profitability. So there were a lot of people who submitted their strategies, and I just selected one which, to my opinion, was the best in terms of description, in terms of test, so in terms of results on historical data, and we will see who is the winner and who gets the prize. So here is the prize. Yes, so the winner is Anton, who is not here.
Who was here?
Who was here, but still he asked me whether it is possible to leave the class, and I told him that, okay, there is a risk that there will be the prizes section and you will miss it. He answered that, okay, I would take risks. Okay, he took risks, and you see the results. So this is, okay, the same situation as trading. So you can take risks, and sometimes you may fail. So he described a very interesting trading strategy based on technical analysis. He tested it on historical data, and he received more than 100% profitability on historical data.
That was the spreadsheet that you provided, right?
Sorry?
The spreadsheet that you provided was the historical data, or something else?
I do not remember the company, but so everyone was able to choose any company from the market, and he made and submitted a spreadsheet which was like my spreadsheet with a lot of columns, and still the right column was about profitability, and there were some calculations about the strategy. He took one of the strategies of technical analysis. And, okay, great. And about trading competition, so we had a trading competition this week, so many of you participated in that competition. In the feedback form, you had a question about the trading competition and your, let's say, thoughts about it. That is why I will not ask you now. I will just read all feedback forms. The competition took place from Monday's class till today's class, so it's approximately, let's say, 3 days. And the question is how much you can make during 3 days. So just during 3 days. Because we are talking just about 3 days, I didn't think that anyone will be able to make, let's say, 20% profit or 30% profit or something like that, especially because we restricted the use of borrowed funds. If you are able to use borrowed funds, in this case, okay, you can just play a probability game. You can take a lot of borrowed funds, invest them in one stock, and in this case, you will, in a demo account, of course, and you will be either a winner or not a winner with, let's say, 50% of probability. I wanted to eliminate such strategy because actually trading, it's not only about profits, it's also about losses. It means that if you are trying to gamble, you can make some money during 3 days, but at the same time you can lose a lot of money during the next 10 days. That is why we didn't use, so using of borrowed funds wasn't allowed. I didn't give you this explanation during the previous class, now here it is. And the best result was approximately plus 5%, 5% during 3 days. If we do some math, we can imagine how much we can do during a year. If you make 5% during 3 days, it means that we make approximately 1.5 every day. And this will result in several hundreds of percent of profitability during a year. Still, this is not a good way to calculate profitability during a year, because you understand that you can get good profitability now, but bad profitability afterwards. But for these 3 days, when the competition took place, the best result was plus 4.7%. And here is the name of the winner, who receives another prize and who also has left the class. Yes? Okay. I will have 2 prizes today. Okay, unfortunately, all our 2 winners took risks of leaving the class before the end and before the announcement of the winners, and they now are not able to get prizes. Okay.
They should have lost somewhere.
No.
They should have their loss life in something there.
Yeah. Okay, so as for the summary of the course, first of all, I would like to thank you for your participation in the course. I didn't expect that there will be such a huge amount of, such a huge number of participants in the class. We have some, let's say, housekeeping stuff about education office. So you saw that spreadsheet with feedback forms. You have approximately 2 days, 1 day and a half to fill feedback forms. I will update the current status by midnight. So during the night I will refresh, let's say, I will add field feedback forms to that spreadsheet, so you will be able to see your current status, and there is the last column which I will send to the education office on Sunday, so you now have time to submit all feedback forms, all 6 of them. 5 links are published on Stellar. The 6th link will be published tonight for today's feedback form. And on Sunday I will send just the last column to the education office. Okay, that's it. Thank you. I hope that you will be able to make a lot of money on stock market, and maybe we'll repeat our class with more advanced techniques in future. Thank you.